Nigeria's oil output is soaring, but earnings just tanked by 3.18 trillion Nigerian Nairas. How do you pump more oil and make way less money? What's really going on behind the numbers? Nigeria is facing a puzzling situation. Even though crude oil production has increased, earnings from crude exports plummeted by 3.18 trillion Nigerian Nairas in the first half of 2025. Understanding what drives this gap is critical, not just for investors and government, but for every Nigerian trying to make sense of fuel prices, foreign reserve health, and the country's economic direction. Here's a deep dive into what's known so far, why earnings dropped despite output rising, the implications, and what can be done to reverse the trend. What the headlines say. According to Punch NG, crude exports dropped in value by 3.18 trillion Nigerian Nairas in H1 2025 compared to previous periods, even though there was a surge in crude output during the same time frame. Punch. The decline in revenue has raised alarms among analysts, economists, and policy watchers who are already worried about inflation, foreign exchange shortages, and budget pressures. Punch. Possible causes. Why more oil didn't mean more money. Here are several factors that may explain why earnings fell despite increased production. Lower global oil prices even with more volume. If the per barrel price drops, total earnings can shrink sharply. Poor export quality or penalties if output is lower grade or doesn't meet benchmarks. It may fetch lower prices or incur discounts. Higher costs of production or export rising costs, transport, refining, logistics, security, eat into margin. Currency devaluation if the Naira is weaker. Earnings converted may look worse in Naira terms. Unfavorable contract terms middlemen, agency fees, commissions, or poor contracts may reduce net receipts. Delayed payments or hidden costs invoices, transit fees, or shipping issues may delay actual cash flow or cut revenue. While the article doesn't list all these explicitly, economic logic and comparable past trends suggest many of these are likely in play. The broader economic impacts. This drop in earnings isn't just a statistical oddity. Its consequences ripple across the economy. Government revenue pressure. Less money from oil exports means tightening for the federal budget, potentially affecting infrastructure spending, social programs, or debt servicing. Foreign reserve strains. Oil revenues feed into Nigeria's foreign exchange pool. If export earnings fall, reserves may not grow as expected, or worse, decline. Exchange rate and inflation. Lower oil receipts put pressure on the Naira and may lead to higher import costs, translating to inflation for everyday goods. Investor confidence. Consistent underperformance despite increases in production undermines trust among foreign investors and creditors. Fuel pricing and subsidies. The downstream sector, fuel importation, subsidies, ultimately depends on crude earnings. Any drop can prompt increases in fuel prices or pressure to reform subsidy schemes. What experts are saying. Based on commentary and early analysis. Some analysts argue that while production surged, global demand or benchmark prices fell. 3. Reduce production and export costs. Cut inefficiencies, theft, pipeline losses, transportation delays, etc. 4. Strengthen forex and payment mechanisms. Ensure payments from buyers are swift and in favorable currencies. Reduce leakages in the conversion process. 5. Monitor global market trends better. Be proactive in hedging or adjusting production in line with global oil price movements and demand forecasts. 6. Transparency and accountability. Publish detailed export earnings, cost breakdowns, and audited reports to track where value is being lost. Risks and what to watch. If nothing changes, the risks include worsening fiscal deficit. The government might borrow more or cut public services. Currency instability. Lower foreign currency inflows could lead to further devaluation. Social impact. Rising fuel prices, higher cost of living, and public discontent. Loss of credibility among investors, international partners, and citizens if oil policies appear mismanaged or opaque. Is there still hope? Yes, though the path is narrow. Nigeria has shown the ability to increase production, so that capacity exists. If global oil prices rebound or Nigeria secures better deals, revenue can recover. Policy reforms, as listed above, could help reclaim lost value. With increasing transparency and accountability, future earnings might better reflect actual production. Final thoughts. At first glance, more oil should mean more money. But Nigeria's reality today reveals a sharp lesson. Output alone isn't enough. How much you earn, how fast you get paid, and how efficiently you export matter just as much. Crude earnings falling by 3.18 trillion Nigerian Nairas even with increased output is a wake-up call. It demands urgent policy tweaks, better execution, and a cleaner, more transparent oil export environment. For Nigerians, this could be a turning point, one that determines whether oil remains a blessing or becomes a burden when mismanaged.
Thanks for watching. If you enjoyed this update and want to stay informed with fast, reliable news, don't forget to subscribe to Newsflash 360. Hit the notification bell so you never miss a story. Your next headline is just seconds away.